Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. Brian, as we close out the quarter tomorrow on Friday, and it has been, I feel there's been enough news flow in just a quarterly cycle to last us for a few years, particularly in the month of March. It was probably one of the busiest months that we've worked in a long time.
Yeah, I mean, this has been endless amounts of activity and events and just media headlines to speak about, to watch securities and the markets react to. So, it's been a very active month.
Even how quick it was just in March, right? We weren't even talking about the banks the first week of March, and then because of digital applications and ways to trade that we didn't have in 08, 09, it just spread like wildfire, and then it was contained just as quick. I mean, almost a banking crisis, I get, somewhat resolved in a span of 2-3 weeks.
Yeah, I mean, that Tuesday, Wednesday, when Powell was speaking in front of Congress, and he was talking about, the Fed's willingness to become more hawkish and raise maybe 50 basis points at the next meeting. Now, eventually, they only raised 25 because of the following or the ensuing banking quote-unquote crisis. But yeah, I mean, is it resolved? I certainly think it's mending. Yeah, and I know that that's what you mean. It's definitely improved a lot. The volatility in the marketplace has come down quite a bit, particularly in the rate sector. So, and we have a Q1 earnings season to look forward to in a couple of weeks. And I think this actually could be an opportunity for the bank management teams to come out, and give some guidance, show some numbers, show some information behind deposits, which I think, has, potential to be, positive catalyst.
Yeah, I mean, to your point, it just feels very different this week than it did over the past 2 weeks. We didn't have anything blow up over the weekend, and we're hearing a little bit more accommodative, tiny bit accommodative rhetoric out there. But let's talk about the Nasdaq-100 specifically, because the outperformance that we've seen to kick off 2023, a lot of that due to the fact that you don't have the financial exposure within the Nasdaq-100.
Yeah, you don't have that financial exposure, so that's helped in recent weeks. But we've seen, those growth names, the tech sector, all year long outperforming. It underperformed last year, but the longer-term trend is, certainly still in the favor of that space. I've been very critical myself that we did see a major turn over the last 18 months coming into 2023 in that growth space. And so this year to date, growth has certainly proven me wrong. And so we'll just have to wait and see how the remainder of the year plays out. But this is the daily period chart of the NDX. The NDX is up over 18% year to date. If you look at the Dow, it's down, still in the red, and the S&P is up about 5.5%. So I can't recall a time where there's this big a divergence in such a short amount of time between those three major indices. And so we're just clearing today above those Feb highs that we've been highlighting now for quite a few weeks. It was early in February, up around that 12,880 level. So we're slightly below from where we opened today, but as you can see, we've been up the last couple of days. We're up 1.5% this week, and higher 4 out of the last 5 weeks. And really, more importantly, is the longer-term time frame. We still have this breakout from the declining trend line that's been in place since, was in place since early 22 into the first quarter 23, and we're just beginning this week to make marginal new highs. So, like I said, up 4 out of the past 5 weeks, which is nice to see.
Yeah, well, part of the performance that we're seeing today, of course, is with the semiconductor sector up nearly 1.5%.
Yeah, you pointed that out to me, and it's not the first time you've done that. And I'm impressed, the stock right here is the daily period chart. This sector is up, the SOX index is up 27% on a total return basis just this year. So very impressive performance. And if this is the daily period chart, what I like about it here is these moving averages, the 50, the 100, the 200. We saw this downtrend where they became somewhat inverted, where the longer term averages are above the shorter term. You don't want to see that. But over the last couple of months, we've seen that kind of fix itself. The 50 crossed over the 200 in early February, and then the 100-day crossed over the 200 in early March or early to mid-March. And so that's constructive, price action. And then on the weekly time frame, we could see that there's clearly defined a resistance line, which was established in June of 22. Well, that's where it began. We came very close to it in August of last year as well. And then all throughout the month of February and March, we've been riding above that 3120 level. And you can see we're just beginning to break out from that level this week. That's I would call a pretty significant level of resistance. And in technical parlance, your expectation on a breakout, especially from a trend line to in place for 10 months or so, and for the last 7 or 8 weeks, it's been clearly, riding up against it, bumping up against it. My expectation in that situation, and I think most technicians would agree, that this is not the end of a trend, but in the early to mid stages of an uptrend.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.